Okay,
Hi,
wonderful.
Kata. How are you?
I am doing great. How are you doing, Tracy?
I'm good. Thank you. I'm so glad that you asked me to be on a call with you. I'm excited.
Well, I know you've got lots of wisdom to share with us. So, first of all, for those of you who don't know, I want to introduce Tracie Schmidt. She is a mortgage loan advisor that has been helping families build wealth through real estate over the past 25 years. She has been featured in places like Forbes magazine, USA Today, and has received awards such as Top Woman Originator and 2021 Elite Woman from Mortgage Professionals magazine. If you were thinking about buying a home, Tracie is the person that can guide you through the process and make your mortgage easy.
Amazing. You're making me blush.
Well, I want to just like get this started. And really, most people just, this is obviously this topic is about credit score. And so, starting with the basics, what is a credit score and what is it important for?
Well, first you have to introduce yourself, please. Who are you? You're such an amazing person. Come on. Who do you work for?
I'm Cata Simonett. I'm the co-founder of Alwyn Energy. I work on solar power and helping people take more control over their energy. So
Amazing. And Kata and I are part of a networking group, and she asked me if I would mind really like trying to help educate people in the community and people that you work with on credit because they don't learn it really anywhere, right? Until they're ready to buy something. And then sometimes it's too late. So I think it's so great. It's such a great topic. So hopefully we could shed some light on credit for you today and for all your people.
yes, please. Yeah, do share.
Awesome.
Do share.
What do you want to know?
Well, what are the biggest credit score myths that you've seen?
That's a good question. So the biggest thing that people tell me, and I'm talking from perspective of reviewing credit when people want to buy a house, right? So they think that if they pay off all of their debt, they're going to have a better credit score, and that's the right thing to do. And while that might be the case, generally speaking, when you pay off all your debt, you don't have anything for the credit bureaus to rate you on, right? You don't have any balances where they could make monthly payments and see that you're financially responsible and that you can make payments on time. So sometimes that actually hurts you. So that's a huge myth is that people think that. So what I always suggest to them, especially if they're looking to buy a home, is, have us first review your credit. We can run a simulator to show you if you did pay off X, Y, and Z, how much it would increase your score, and if it's even necessary. So that's something cool for people to know. Because think about it, sometimes they take 10 grand and they pay off their debt, but then they're left with 10,000 less to buy a car or to buy a house, right? Because they think they have to do it, but they usually
Right.
don't have to do it. So that's a big,
Right. That's beautiful. I didn't even know such a thing existed.
yeah.
I
And then,
mean, that's
yeah,
amazing.
no. And then I think too, like just another myth is that if you have bad credit, you'll never be good again, right? Which is also a myth. I mean, over time, or there's things that you could do, again, running a credit simulator, saying if you settled out this collection, or if you paid down this credit card, or if this amount of time after a bankruptcy went by, you'll start to have your credit score increase over time.
That's amazing. I love it. Would you share with us a time when, speaking of this and building up credit, when you successfully supported a client who had credit troubles, but then they were able to achieve home ownership ultimately?
Yeah, there's a great story. I actually shared it on a video, because June is National Home Buyers Month, and I shared a video with my company on this person because she really just stuck with me. She um God, she was a nurse and she was in the front lines, during COVID, but before that, she got breast cancer, and she just had a bunch of medical bills, and she was raising her family on her own, and just this hardworking woman who had these credit issues that she just couldn't do it all, right? She couldn't support her family and go through this medical issue and be off of work and keep her credit the way that she wanted it. But her dream was to own a home. So a good amount of time went past where she like saved money in order to be able to buy a home. But she came to me and her credit was not in the best place, right? She wasn't at that point yet that she could qualify to buy. And so we put a plan together and, you know, we worked with each other and we figured out what she would need to do, how long it would take. And if people follow that, I mean, it's not, you can't guarantee it, but if they follow that, eventually their credit will get to where it would need to be. And I was able to help her kind of create that path to where I helped her close on her purchase. And I think that she's going to be a client for life just because, you know, I was able to put that plan together, which a lot of people, if you don't qualify, they just push you aside, you know, which of course isn't the right thing to do. So we have to educate people and try to get them, you know, to the other side of credit issues that they might have had in the past.
Absolutely. She pretty much got a 2-for-1 because now having
Yes,
her credit gives her opportunities for so much more in addition to now having her own home. I mean, that's incredible.
absolutely. Yeah. And I should tell her about you and solar. So I'll have to do that.
Heck yeah. So one more question here
Yeah.
for the audience yet today. What is a piece of advice that you offer to people to help build wealth? So it could be that, or it could also be something that you see commonly happening out there that is a pitfall that people can be steered away from.
So I would say, you know, we kind of talked about this where credit is something that, you know, I didn't learn in high school. I didn't learn in college, right? Where we don't, for some reason, we don't teach about it when kids are young. And
No.
one of the biggest things that my parents could have done for me is when I was younger, they put me on as an authorized user on one of their credit cards. Now, I didn't have access to the card, right? I couldn't go use it, but it built credit and established credit for me. And then when I went into college, the biggest piece of advice that I got was get a small credit card and kind of just use it for like groceries and gas and then pay it off. Nothing crazy. But you have to establish credit, right? There's a lot of young people today that think, oh, who cares? Just, you know, I'm not going to pay that medical bill or it'll never catch up to me. But everything is based on credit in the US, right? If you want to buy a car, if you want to buy a house, if you want to get a credit card, if you want to get solar, I mean, there's everything is based around your credit score and how well you've managed that from the time that you've started it until the time that you're, you know, older and you understand it better. So I think to build wealth and be able to experience home ownership and, you know, having your own car and all of those things, you have to have good credit established, which all starts from, you know, kind of high school age, I would say. So that's
Okay.
the biggest piece of advice that I could give is if parents had the conversation about credit, helped their kids kind of, again, with the authorized user accounts, like they don't, when you're older, right, and you have established credit, they don't help you, but at the beginning they do because you start to get credit scores established. So I'm not sure if you knew
Oh,
that.
no, I've heard about the authorized user, but not in that respect. And
Yeah.
then
How did you
tweaking it.
start with credit? Like when did you learn about credit personally?
Oh, that's a great question. Probably high school, if not right after high school.
Yeah.
I want to say it was probably high school when I had
Yeah.
my first credit card. And it was probably some shopping place.
Yeah, like you always go to.
Mall.
Yeah.
Yeah.
Well, that's the thing is like get and there's even people that have poor credit, they can get what's called a secured credit card. So you could get let's say a card for $1,000, but you give the bank $500 of your money, so it's secured, right? So they know that if you don't treat your credit right, that they actually have some skin in the game. So there's things like that. If you're just starting out, getting like a Target card is not going to have as great of an impact as getting a bank card. So you're going to like getting a gas card isn't as impactful as going to like Chase or Wells Fargo and getting a small credit card from an actual bank or financial institution. So you want to try to establish yourself at the beginning with cards that are a little bit harder to get, right? Versus a store card.
So what about an airline card? Does that fall in the
Yeah, because
retail?
usually they're
Okay.
backed from bigger banks, from like a Citi or, you know, a Citibank or a Chase Bank. So that
Okay,
bank
so
is
I
kind of behind that card. So that's good.
So an airline card is good
Yeah.
then to start with. Okay.
Yeah.
Okay, that's
And
great.
yeah. And I always try to tell people too, it's, especially with the interest rates and hearing them rising in the mortgage market, an average interest rate on a credit card is in the 20s, right?
Mhm.
But people
Mhm.
don't want to buy a house at 7%. So I try to tell people, like, look what you're paying. A credit card is revolving, meaning you're just paying interest after interest after interest. If you really look at your monthly payment and what percentage of that goes to interest, it's like 80%. It's a lot, right?
Okay.
So people, homeowners, especially now that have equity in their homes and they don't want to touch the interest rate on their first mortgage, they're doing what's
Mhm.
called an equity line of credit. And it can help with things like buying solar in cash, right? If you don't want to finance it, or consolidating high interest rate credit card debt to a lower interest rate, like let's say 8% instead. So there's a lot of ways for people to take advantage of home equity and get lower rates. But it's funny. I think it's like if you take a $5,000 credit card at 22% and only make the minimum payment, you're going to have it for like 13 years or just something insane, and it's like sometimes you just charge and charge, and it's like unless you get bonuses or big amounts of income, it's going to be really difficult to pay off a $15,000 credit card at the end of the day.
Right.
Right. So it's better to
100%.
consolidate that debt into an installment loan, which is like a personal loan, or if you finance something over a term.
Wow, that's gold right there. Wow. Okay, so
Yeah.
consolidation, that's your second tip.
Yes.
And a quick question about the authorized user.
Mhm.
How old does one have to be an authorized user? Do you know the minimum
I
age?
think 18. I'm
18.
I'm
Okay.
pretty sure. Yeah. I don't know. It might also depend on the credit card company, to be honest, but it was so long ago because I remember it was before college that my parents got me on that card. So it's probably in that age range.
Okay.
Yeah. And one thing
Awesome.
too, that people need to be really careful of are inquiries. So for example, if you go and shop for a car, right, you want to have the conversation with that car dealership. Hey, I'm trying to not have you inquire, because they'll try to like inquire with multiple banks, right? But every person they inquire with is going to run your credit and it's going to show as an inquiry. And the more inquiries you have over a short period of time is going to decrease your credit score. So just
Mm,
being cognizant of going in to buy a car, and I'll always say to them, like, what bank is your best? I want you to run it through that bank first. I don't want you to shop my credit. Let me know what rate they're offering to make a decision whether or not I want you to shop. Right. So just
right.
knowing to kind of say that kind of stuff. And also, with mortgage inquiries, they're not the same as credit cards. So people that inquire for a mortgage, if you do it within a short period of time, the credit bureaus know that you can't open more than one mortgage at a time, right? But credit cards, you could open multiple cards at a time. So a mortgage inquiry doesn't have as much of an impact as a credit card inquiry, if that makes
Oh,
sense.
fascinating.
Because every
Wow, you would
inquiry impacts
never
your
think
credit
that.
score. Yeah. So those are
You would
just
not think
things.
that.
Yeah. And after 90 days, generally, the inquiries start to drop off. And so, if your score is low because of inquiries, we have to wait over a period of time for those to just go away. We can't do it any faster than just time on the credit report.
Wow. It's like having access to this little crystal ball that you have, it sounds like.
I've been doing this for a long time. And there's 3 credit scores. And so people, it's funny because they do you have like a little app that says like, do you want to know your credit score? Do you get that at all?
Yes, and emails sometimes, yeah.
Yeah. So, and I don't know, like in your solar world, because what credit score generally do you need to finance solar or to take it over?
Typically 650, sometimes
650.
lower.
Okay.
Yeah.
So do people come to you and they're like, oh, well, I saw on this app that my credit score was this, and then you end up finding out it's really something else? Do you experience that?
Yep. Or it's like a debt to income thing and it's not really about the score itself.
Yep.
Yeah.
So that's the thing, is when people, it's good that you have that as a base, but it will never be the credit scores that we use in mortgage, because we're pulling our own credit report. Generally, like Equifax and Experian and TransUnion, they're going to report differently to us the day that we pull credit versus you getting one score off of an app from your bank. right? So like
Okay.
if you get that score and it's a 780, likely when I review credit, it's going to be higher. But if you get that and you're like, it's a 680, with me, it could be a 650, a 660, like you don't know. And that changes your qualification on things. So I always tell
Okay.
people, don't rely on that, use it as a guide and have someone actually review your credit, if you're trying to figure out what you could qualify for to buy a house, especially.
Right. Absolutely.
Yeah.
So it's more of like here's a teaser, but we really want to
And they're
double
like,
check
but my
it.
score on this, it says this. And I'm like, but people they can get a free credit report once a year. I think it's just freecreditreport.com. And it's
Oh,
offered by the credit bureaus. And so you can get one free copy of your credit report per year. So you can kind of gauge. I would always look to do that to make sure there's no like fraud or accounts that you didn't know about. I would see maybe accounts that you don't use anymore. If they still say open, you'll want to call those creditors and ask that they be closed if you're not using them.
okay. This is brilliant. I feel like everybody should know this and everybody should do that, you know?
Yeah. Yeah, I've done it. Like Fry's Electronics went out of business, but on my credit report, it showed a high credit limit, which it's good, but also like I'm never going to use that card again, right? So I made sure that it showed closed on the credit report because you also don't want to look like you have access to all of this credit, right? It's a game. I mean, it's kind of like you have to be in that perfect middle spot.
Right. Yeah, it's so a game. And I love what you said about debunking those myths and what you think is great is really not, and paying everything off. Like you want to have something out there, but
Mhm.
you also don't want to have it maxed, right?
Nope.
Like that's kind of the sweet spot.
50% of your high credit limit,
100%.
your balance should be less than 50% of that is the goal.
All right. So standard 50%. Okay.
Yeah, and also look for things like right now. So what happens is when you hear in the news that the Fed is raising rates, right? So what they're raising, it's not mortgage rates, they're raising the federal funds rate, which is a direct impact to credit cards, car loans, student loans, things that you're financing. Now, mortgage rates go up because it affects the market, and then the market, the stock market affects the rates and things like that. So you want to, be careful where you look at your statements, see how high your rates have risen to. And if you get an offer for like, 0% or something for the next 12 months, you may want to, transfer balances while rates are continuing to go up to save some money and interest. So be
Right.
cognizant of that because your credit card might have been at 20%, but if they raise rates another 0.75%, you're getting that increase into your credit card debt.
Absolutely. Yeah. Wow. Just these little things can save thousands of dollars, right? I mean, just
Yeah.
being savvy with knowing the tricks of the trade. So,
Yeah.
wow. Thank you so
Awesome.
much,
You're
Tracie.
welcome. I'm so glad to have this quick call with you. And I've always tell people if they have any questions, to reach out to you or they can reach out to me. I would just Google like Tracie Schmidt or the Schmidt team and you could find my contact info or go through Kata and she can provide you my info as well. And so we could get this info out to as many people as possible.
Absolutely. We'll put your info, your phone number, everything
Awesome.
in this chat or in the
Anything you want
post.
to add on your end?
Um, I mean, I think that I learned a lot from
Good. And you just
from
got
this
married,
call.
so you didn't rack up credit card debt, right?
No,
Okay, good.
definitely not. No way.
That's awesome. That's so awesome. Well, thank you so much
Just
for
the
having me. And
I
what'd
know
you say?
like, yeah.
What'd you
Oh, I
say?
was just saying, I know that the common mishaps are like over the holidays and things. People tend to rack up a lot of debt on credit cards. So interesting. So marriage is probably another one. Yikes.
It
No.
is. Yes.
Anyway,
Marriage is like the wedding, and then it's on a credit card for 10 grand. And then it's like, oh, but yeah,
starting
holidays.
off on a great foot.
people are gonna
No.
people are gonna use credit. I mean, it's great, like especially like let's say Best Buy, right? You can get a computer and do maybe no interest for 6 months or furniture
Mhm.
stores. I mean, just gauge it where you divide it by the number of months to make sure you have enough money to pay it off in that time frame. And you could get something with no interest. I mean, I do that all the time, but you definitely don't want the interest to accrue, and then you don't pay it off, and then you're paying back interest for that whole term. But just kind of read the fine print, and that's what we're here for. We're resources for people.
Yep.
Awesome.
Yeah. Thank you so much,
I look forward
Tracie.
to our next call.
The chat, and yes, I'm excited for it too.
Awesome. Thank you.